So in yesterday's episode, we took a closer look at this analyst that was very bullish for Nvidia, KeyBanc, as they increased their price target to $180 from $130. And today I found out a lot more information, so I want to share it with you guys, and it got me really excited. So let's take a closer look at that and some other news impacting the overall semiconductor market. So let's get started.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So the first bullish thing came out for Nvidia was TSM, and this was pretty much something that fueled the whole semiconductor market. TSM is up roughly 3.5% after reporting its monthly number. For those not familiar, TSMC reports revenue on a monthly basis, so us as investors actually get to see how that company is doing and how the overall market is doing. On the great news is TSMC mentions that versus a year ago, their June 2024 revenue was up roughly 33%. So obviously this gets a lot of, this brings the whole semiconductor market excited because it showcases that there's huge demand for manufacturing chips. And if there is huge demand for manufactured chips, it can trickle down that these semiconductor companies are seeing huge orders. So it means that these semiconductor companies should see a huge revenue boost. Now, it is important to understand that, right, the manufacturing takes time. Not only is there the manufacturing phase, but then you have to put all these chips together to have the final product. So when a company manufactures these chips, the actual product themselves might not come out for a quarter or two from now. So this is kind of giving us that insight that, hey, look, within the next quarter or two, the semiconductor market is still expected to see strong growth because we are seeing the huge demand for manufacturing. So overall, that was very bullish for Nvidia, as obviously they are probably seeing a huge growth in their AI chips. But not only that, Nvidia also creates GPU and products that go into the consumer market, into the enterprise laptops, into kind of the consumer laptops as well. So it can also be an added boost or an added tailwind for them in that segment. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. Now staying here with TSMC, there are reports that TSMC is increasing the price of its 3 nanometer chip by up to 10%, and it is decreasing the price of its 7 nanometer chip due to weak demand. And this perfectly makes sense. I mean, it's typical in the manufacturing node where, hey, look, your most advanced manufacturing technology becomes more expensive, or it's more expensive for customers because you need to pay them for that research and development. And obviously, if you're seeing a weakness in a certain industry, to kind of continue to have strong customers there, you kind of reduce the price. So nothing here that, in my opinion, would be a bad or good news for TSMC. It's just your typical movement of the manufacturing business. Now, taking a closer look at another company, AMD. So AMD today was up roughly 3.8%. I do believe, like most other semiconductor stocks, they were pretty much green because of that movement from TSMC. The second thing is AMD is actually acquiring an AI company right now for roughly $665 million. So maybe some NVIDIA investors might be wondering, hey, Jose, is AMD kind of buying this AI company bad news for NVIDIA and their software mode and their AI solutions mode? I want to say no. The company that they bought seems to be a pretty niche market where it's more like engineers providing solutions for enterprise companies. And here we can see that AMD acquires this company to expand their enterprise AI solutions globally. So I really wouldn't worry much as an Nvidia investor. If you are more curious about this news, though, I did an episode on this a few hours ago. So if you're an AMD shareholder, make sure to check that out. But as an Nvidia shareholder, I would say there's nothing to worry about here. Now, at the beginning of this episode, I talked about how yesterday we talked about this KeyBanc analysts that increased their price target to Nvidia to some crazy levels of $180. And that's pretty much all I shared yesterday. But today I actually found out a little bit more about it. So the KeyBanc analyst was John Vin, and they estimate that the NVL72, which is going to be the Grace Blackwell kind of super servers that they're going to be selling, is going to, they expect it to account 60 to 70% of rack volume for this year of 2025. And they mentioned that, hey, look, this past quarter, they saw that the demand for GB200 is actually much greater than they previously anticipated. And they believe that the GB200 system can support up to $200 billion in data center revenue in 2025. And why I think that is impressive is because the company, we can see for the next fiscal year, so the next fiscal year would be the calendar year of 2025, analysts expect roughly 160 billion. So this is a huge a huge kind of bullish scenario by this KeyBanc analyst. They say, hey, look, 160 billion is not enough for the next fiscal year, which is pretty much calendar year of 2025. What they really see is $200 billion. Now, that is insane. Now, that is pretty amazing, especially if they have another tailwind. And this is something that we talked about in previous episodes, but I just want to bring it up because we can kind of continue to see this nice bullish trend in Nvidia right now. So right now we are seeing that Nvidia is expected to make at least $12 billion this year in selling GPUs to China. So many people who are investing in Nvidia right now believe that the Chinese market is dead for the AI space because of the restrictions and the competition there. But based on recent analyst reports, that's not the case. They are expected to make a nice amount of revenue, and this can be the nice tailwind that's going to be revenue estimates this year for Nvidia. So I know we talked about it in previous episodes, but I just want to bring it up because I think this is very, very important. Now, before closing this episode, I want to take a closer look at Supermicro. So Supermicro recently got some analysts kind of downgrading the stock. The stock right now is sitting at $900. So I believe if Supermicro if we're seeing this huge benefit of Nvidia, if Nvidia is expected to sell some crazy amount of AI servers in 2025, that can only mean amazing things for Supermicro. So Supermicro is definitely a stock that can definitely be very bullish in the long term of things. Right now, I personally would rather still invest in Nvidia than Supermicro. I think if Supermicro falls below those $700 again, or in the low 700, high 60s, that's where an investor should definitely keep a closer eye on. And I think it is possible we get those numbers. And let me tell you how we can get those numbers in a bit. But recently there was an analyst that cut his rating on Supermicro to a neutral from a buy. He did keep the price target of $930. The main reason is he believes that right now Supermicro has changed from a company that was not really known too much, so it was easy to beat low market expectations. But right now, with everybody keeping an eye out on Supermicro, expectations are much higher, so it's a lot harder for them to beat those expectations. They mentioned that right now there is a lot of uncertainty surrounding the supply of advanced packaging, which is needed to build AI chips. And if there's some form of supply chain issues on AI chip, that can obviously hurt Supermicro in the long term. So I want to say I agree with the analysts one way or another here, and this is how I can see Supermicro seeing a huge dip in price. So in the long term, I think Supermicro is going to do fine in forms of AI sales, especially if this news of Nvidia is true and Nvidia sells tons and tons of AI servers in 2024 and 2025. What I do see happening is sometimes supply chain, even though supply chain issues are getting so much better, there might be some bottlenecks for Supermicro where one quarter, just because they didn't get the chips for the time of that quarter, it might seem like revenue might take a hit. So I want to say for Supermicro, because of supply chain issues, there might be some pockets that look like weakness, as we might see maybe revenue didn't beat expectations or something like that. But those pockets of weakness, in my opinion, are going to be false pocket of weakness. The main issue is it's just going to depend on that supply chain. Now, if we do see those fake pocket of weaknesses, I think the market is going to see it as real pocket of weaknesses, and we're going to see a huge decline in Supermicro. Now, obviously, earnings are going to be coming up in the next few weeks for Supermicro, so we are going to be keeping a closer eye on. If we do see that weakness and we do see a huge decline in Supermicro, I would say right now it definitely seems pretty attractive, especially with everything we know now about the AI market. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.